Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach financial freedom as quickly as possible. And in today's video, I want to talk about the blockbuster year we just had in 2022, but also in 2023. Looks like we're going to have another great year in terms of new funds, new income-oriented options for us income investors. So there's been over 20 plus brand new funds or ETFs on both the Canadian and US stock market created recently. So I'm going to go over them very, very quickly here in case you missed them. And for most of these, I've actually covered them in detail or created videos on them. So I won't go into detail here, but this is a reminder of just the amazing year that we just had in terms of new funds for us income investors. So let's check them all out together right now. All right, everyone, let's quickly go through the Canadian stock market first, where we had a crap ton of new funds, to say the least. So let's start with Hamilton ETFs, one of my favorite ETF providers, as you all know. Of course, the first one we have to talk about is H-Yield or HYLD. This was created in 2022. It's a sister or brother ETF to HDIV, HDIV, the very first all-in-one enhanced covered call ETF. So HYLD pretty much it was designed to track the overall US stock market. So really, really good fund. My biggest position across my account. So this is the first blockbuster or brand new ETF that definitely cannot be ignored, everyone. And speaking of Hamilton, they also came out with two new in 2022, of course, enhanced ETFs that are not covered call. So you have HFIN, which is the Hamilton Enhanced Canadian Financials ETF, which is, you could say, a sister ETF to HCAL. So HCAL is their enhanced ETF. When I say enhanced, they have a little bit of leverage, 25% leverage on the big six Canadian banks. But HFIN, which they recently added to HDIV, by the way, is the six banks plus insurance companies and also asset management companies. So it's pretty much, you could say, diversified financials in Canada, but it is a big chunk still in the Canadian banks. No covered calls, but 25% leverage. They also came up with HUTS, which is the same concept as HCAL and HFIN, except this is the utility sector in Canada. So utility sectors, makes a pretty big chunk of the overall Canadian market. So of course, we're talking about Bell, Telus, Rogers, the pipeline companies, Pembina, Enbridge, and what else do we have in here? Of course, some utilities companies as well, right? The big ones like Fortis, Emera, Hydro One, etc., etc. The Brookfields are in here as well. So these are awesome enhanced ETFs. They're not covered calls, but they're definitely income oriented to give you a little bit more yield and return off the utility sector and the financial sector in Canada. Moving on to Harvest, of course, they came out with their own enhanced all-in-one covered call solution. Of course, I'm talking about HDIF here, which basically combines six of their ETFs, of their covered call ETFs together. You have them here, and on top of the structure at 25% leverage. So this is a huge portion of my portfolio as well. I absolutely love these all-in-one covered call options that we have now. So we have HDIV, that was the first one. Now we have HYLD as well. We have HDIF, and of course, now we also have Brompton. So BMAX also came out in 2022, everyone. This is Brompton's version of their own all-in-one income-oriented solution. It has 33% leverage instead of 25%, so a little bit more leverage, but it's 70% stocks, 30 or 70% equity, and 30% fixed income. I have a detailed video on it. I also talked to Chris Cullen, the ETF guy at Brompton, really nice guy with an epic mustache. So make sure to check out that video if you want to see the detail of BMAX here. But really, really great year for the all-in-ones. Three brand new ones, HYLD, HDIF, and now BMAX. But that's not all. From Harvest, they actually came out with two brand new ETFs, one finally covering the Canadian market. So I'm talking about HLIF here, which is, you could say, is pretty much a competitor to BMO ZWC. So in here, you have 30 fantastic Canadian dividend stock companies. So this is like, it's all if you want something in Canada, and of course it has diversified Canada rather, and it has covered calls on it as well. They also came out with HESG, very similar to their brands ETF. So really good brand companies in here, powerful companies, you'll recognize them, but score fairly well on the ESG meter. So there's 30 companies in here. But the ones I'm really most excited about for Harvest, besides of course HDIF, is they came out with enhanced versions or leverage versions of 5 of their popular covered call ETFs. So you have HHLE, which is just adds 25% leverage on their biggest and most popular covered call ETF, HHL, which is healthcare. So if you just click on portfolio, all you will see is HHL at 125%. So that's all it is. It just holds their, their corresponding ETF, and they add 25% leverage on it, which means 25% more yield and return over time. So they have HHLE, which is the enhanced version of HHL. They have the brands one, HBFE, enhanced version of their also very popular brands ETF, where they have 20 of the biggest brands. There it is, HBF, mostly in the United States. They came out with a leveraged version of their HTA, that's their tech ETF, which has the highest yield out of all of them because tech is low right now. You're getting 12% yield with this one. They came out with a leveraged version of their utilities one and their new Canadian one as well, which is at 9% yield. So awesome leveraged options here. Which give you just 25% more yield in case, instead of getting HDIF, for example, which has all of them together, for every, you love particularly the healthcare sector or the utility sector because you're more defensive, but you don't mind getting a little bit more bang for your buck, taking a little bit more volatility to get more income and yield. Well, you have leveraged versions of these. So very, very interesting. Speaking of leveraged versions, Evolve ETFs came out with a lot of new funds in 2022. A lesser known ETF provider in Canada, but they're fairly big and growing, and they do have a lot of covered call options. I actually review all their ETFs. I also speak to the CEO of Evolve. Make sure to check that out in case you missed it. But let's go over their brand new ETFs. You have Bank. So Bank is the only one that they have that's leveraged and has covered calls. So this is basically, you could say, an alternative version to the LBS split share fund from Brompton. It has the Canadian banks and life insurance companies. It has leverage, 25% leverage and covered calls. So it's a great replacement for LBS in case you don't want the split share fund structure. It has really, really high yield. Last I checked, it was about 10.6. So really nice way to get the Canadian financials with covered calls and leverage, diversified Canadian financials. They have a European banks covered call ETF. Very, very rare and unique. It's the only one that on a Canadian market that I know of. So in case you want a little bit of financials diversification or regional diversification, you can get all the best banks in Europe with covered calls. So that's EBNK. They also came out with a real estate covered call ETF. That's also very rare to get covered calls on real estate or a collection of REITs. So they collaborated with Slate, which is a big REIT company in Canada. They have Slate Office REIT, Slate Grocery REIT, and they came up with this ETF called BILT, B-I-L-T, which is just a collection of REITs with covered calls. So if you want to get a little bit of more income with those covered calls, you could do that. And it's about 6% yield. And it just came out. If you look at the portfolio, they have a bunch of REITs all over the world, not just in Canada, but you have United States, Australia. So worldwide REITs here with covered calls, pretty cool. And of course, the two brand new ones that just came out last week in 2023 is ESPX and ETSX. Very, very interesting. Covered calls on the S&P 500 for ESPX, target yield, look at this, 9%. And covered calls on the TSX 60, which is kind of like the Canadian S&P 500, but it's 60 companies instead of 500, which is normal because Canada has a lot less companies. So you're basically owning the whole entire US market and Canadian market, and you're getting covered calls with really high yields of 9% plus. So I am expecting to do another video in collaboration with Evolve to talk about these two new ones. So stay tuned for that. So other two great, more index options. So instead of getting XYLD or a JEPI, those are on the US market. If you want that in Canada, but you want a Canadian ETF, you now have ESPX, which is covered calls on the S&P 500. I'm assuming this is going to be very popular. Same with their TSX 60 covered call. You also have, speaking of index funds that are now in Canada, you have QQCC from Horizons. This is definitely Horizons, one of my favorite ones from Horizons that they recently came out with, QQCC. So instead of getting QYLD on the US stock market, you could get QQCC, which kind of does the same thing, but it's listed on the Canadian stock market. Very, very high yield. And again, I do talk to the portfolio manager about this ETF, so make sure to check it out. So a lot of great options in Canada here. Maybe I forgot some, but there it is in Canada. Before we check out the US ones, I just want to make sure you guys know that I have a lot of detailed videos on most of these ones, and the easiest way to really find them is if you just click on the any one of my videos, you click on the name of my channel, use this little search here and search for the stock symbols, right? That's just the best way. For example, if you just put HLIF, which is Harvest's new Canadian one, you'll get my HLIF video here. If you put HESG, you'll get my video on that one. So it's a nice way to search the videos quickly in case you're searching for a particular fund. Last but not least, at the end of 2022, Purpose Investment announced their yield share. So these are very, very interesting. They're ETFs, 5 ETFs that only have one stock in them. So you have them here. You have one for Google, one for Apple, one for Amazon, Tesla, and Warren Buffett's company, Berkshire Hathaway. So what they do is they have an ETF with only one stock, but they write covered calls on 50% of the shares while having 25% leverage. So it's very interesting. You're kind of giving up approximately 50% of the upside, but not even 50%, less than 50%, because the calls are not out, they're out of the money. They're not at the money, if what I understood is correct. And stay tuned for an upcoming Q&A video with Purpose on this. So you're giving up some upside, but you're getting yield thanks to those covered calls and that 25% leverage. So if you look at the Tesla one, for example, which has the craziest yield, over 20% yield based on the first distribution. And as you could see here, covered call strategy, so approximately 50%, and moderate leverage 25%, while staying invested in Tesla. So this ETF, YTSL, for example, only holds Tesla shares with 25% leverage, and they write covered calls on about 50% of the portfolio. And the management fee is pretty low. So they do the same thing. This is the Tesla one. Here's the Amazon one, 10% yield. Here's the Apple one, 9.88% yield. So if you like any one of these 5 companies, you want to invest in them, you really like them, but you're an income-oriented investor, now you have this option as well, these options here from Purpose. So there you have it. All right, on the US market, there was quite a few new, covered call or buy right ETFs. The most important of which, in my opinion, is JEPQ. So JEPQ, guys, is basically now a competitor to QYLD or QYLG, and it's the brother or sister ETF to JEPI, the most popular covered call ETF on the US market. Both JEPQ and JEPI have been added to the HYLD ETF, which is great. So JEPQ does basically the same thing JEPI does, except it's on the NASDAQ 100 instead of the S&P 500. So these are more actively managed versions of QYLD and XYLD. They don't write at the money covered calls on the whole thing. It's more actively managed, so you could expect a little bit of income and growth as well. And lately, the income has been absolutely phenomenal. You see that here, average yield of over 17% of JEPQ. So it seems like when volatility is high, you're going to get higher income from both JEPI and JEPQ. So JEPI and JEPQ, in my opinion, are now really the top contenders for the top 2 covered call ETFs on the US. They might take the crown away from QYLD and XYLD, but I'm not going to abandon QYLD and XYLD just because of that. But they have, the numbers don't lie. They have less fees, and the yields are really high. They're getting bigger as well in terms of AUM. So really, really interesting option here, JEPQ, a really fascinating alternative to QYLD, QYLG, even something like a NUSI. So really a good way to get some income or monthly income off the NASDAQ. So very, very interesting. Definitely the most important new one in 2022 on the US side, in my opinion, in terms of covered call ETFs. You also have 3 very interesting, I can't believe I'm saying this, fixed income. I know I always say I hate fixed income, but fixed income with high yield and covered because of covered calls, now I'm a bit interested. So BlackRock or iShares, by BlackRock came out with 3 very, very interesting options. So you have TLTW, LQDW, and HYGW. I made a detailed video covering all 3 of these. But basically, it's fixed income with covered calls. So the TLT is just government bonds with covered calls. LQD is investment grade corporate bonds. When you see investment grade, it means good, very, very high quality corporate bonds with covered calls here. And then you have HYGW, which is just high yield corporate bonds or more regular corporate bonds. So this is the one I personally invested in, and their distributions have been extremely high. We're talking over 15% yield here, much higher than that actually. So Finally, a great fixed income option if you have a high yield portfolio, you have an income portfolio, and this is a great way to actually get some fixed income with high yield here. So basically what they do is they simply write covered calls on their own TLT ETF, LQD ETF, and HYG ETF. That's why if you just look at the holdings, you will simply see their ETF. Right here it is, HYG, plus you'll see the covered call here. So very, very high yield. I'm very impressed with these so far. They're pretty much brand new. They've only been out for like 5-6 months, and the distributions have been absolutely very, very impressive. So HYGW is the one I chose, but all three could present some good options in your income portfolio on the US side. There's also IDVO. So this is a sister ETF to Devo. So Devo is a very, very popular ETF. It does do covered calls on top quality US dividend stocks. Very, very popular. It's not super high yield. It's probably the least yielding covered call ETF, but people like it because it has great returns and it has a lot of growth prospects. So you're looking at like 5% yield. So IDVO, they came out with this version. It's basically an international dividend stocks with some covered calls. So Devo is just American dividend stocks. IDVO is international stocks with covered calls, and you see here that the yield is about 6%. They don't write covered, they're not very aggressive covered calls, but it does give you a little bit of income. So another great option if you are an income investor, but you have things like SCHD and you like a little bit of growth as well. So IDVO complements Devo very, very well. Last but definitely not least, Global X came out with a bunch of new ones. So when you go to Global X, by the way, you could always click on their ETFs and you click on income, so you see their income oriented ETFs, and they came out with 3 brand new covered call ones. HYLG, which is covered calls on healthcare stocks, FYLG, which is covered calls on financial stocks, and TYLG, which is covered calls on technology stocks. But unlike QYLD, RYLD, and XYLD, they're only writing it on 50% of the portfolio. So they're more similar to QYLG and RYLG and XYLG. And by the way, RYLG is also pretty new. So RYLG is a half version of RYLD. So QYLD, all the D's, it's 100% covered calls on it. I'm talking about QYLD, RYLD, XYLD. Then you have QYLG, RYLG, and XYLG, which just does the same thing, but only on 50% of the portfolio. So you're looking at half the yield, but half growth prospects. So that's what these 3 new ones do. So it's the first really sector-specific covered call ETFs from Global X. So healthcare, financials, and tech. Very, very interesting. Also, they came out with a Dow Jones or a Dow 30 one. I think this is, when did it come out? 2021 or 2022? Yeah, 2022. So I guess we could add this one to the list too. So this complements basically the QYLD and RYLD and XYLD. Now you have the Dow Jones, which is another popular index. So you have all 4 index funds now with Global X with covered calls. So there are some new or the notable new ones on the American stock market. Very exciting time to be an income investor, everyone. Hey, don't go yet. I have some important reminders, including some more recent ones, and I'll try to keep it as brief as possible. And for everything that I'm about to discuss, the links and info are in the video description below. So first of all, if you didn't know yet, I do offer a one-on-one coaching session where you'll have a 1-hour Zoom call with me where you could ask me all the questions you want, and I'll help you and assist you best I can. Just remember that I am not a licensed or registered financial advisor or planner. So to book a session, go on my website, passiveincomeinvesting.ca, and right there on the homepage on the left-hand side, there is a small video. Watch that video to know how to book a one-on-one properly with yours truly. Also on my website, you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once. And this is really a reference tool or a companion tool to help you build your own portfolio according to your needs and your objectives objectives. It has lists of funds, it has sample portfolios for both Canadian investors and American investors. So make sure to check it out on my website. I actually created a video which shows the product from A to Z, because I don't want you to spend money unless you know exactly what you're getting. So make sure to check that video out on my website. And don't take my word for how good it is. Check out the reviews. There's over 300 of them, and they are all 100% real reviews. So here's some more updated news or recent news. I am now on Blossom, a new investing app designed for investors. I've been using it for a few weeks now. I think it's really, really great. It has a really cool feature where users could actually add and share their portfolios and what they're buying and selling every day. So you could actually link your investing account so it's updated automatically on a daily basis. I recently added my own main portfolio so you could follow how my portfolio is doing live and what I buy every month. Really, really cool. It's like a mix of Facebook and Twitter, but specifically for investing. So get on your phone, click on the link in the video description below and download the app. It's 100% free, so you too could share your portfolio. Just remember to look for me and follow me. My username is Adrian, PII altogether. Also, I do have a referral link for Questrade, so you could get $50 worth of free stock purchases. This is the Canadian discount broker that I use and I recommend. Unlike Wealthsimple, the other popular discount broker in Canada, you could drip everything you want. It has all the stocks, and it also has dual currency accounts. Very, very convenient if you're buying both Canadian stocks and American stocks. I have a Questrade video, by the way, which gives you a little tour of the features, so make sure to check that out. I also have a referral link for PASSIV. This is the portfolio tracking tool that I use to consolidate all our accounts to get a nice bird's eye view, so you can consolidate all the information together for easy tracking and stats as well. Also, our Facebook group, Passive Income Investing, is now an invite-only private group. So to join it, you need to click on the link in the video description below and give the group a like to get invited. So we take pride in making this one of the best investing Facebook groups out there with over 13,000 members. There's no scams, there's no spammers, and negative and doomsday people, we kick them out right away. Also, follow us on Instagram if you want a little bit more of our personal journey here in Panama. And lastly, just remember everyone, I am not a licensed or registered financial advisor. This channel is all about my personal investing journey and how I invest to generate high passive income from a diversified portfolio of high yield funds. It's for educational purposes only, so don't forget to do your own research and due diligence. And of course, stay safe everyone, stay healthy, and of course, stay passive. See you next time.